All right, hey guys, it's Colin Fett here with your November market update. These are going to be numbers from year to date to October is what we're going to be talking about today. I got some really interesting data to share. I'm going to turn it over to Kylie. She's going to run through these numbers and then I'll jump back in.
So in the month of November, we had 38 new listings, 65 for sale with 34 pending, 521 year-to-date number of units with an average sale price of $326,596 with an average of 33 days on market.
All right, so I'm going to dive into pendings a little bit, some interesting data. So we're looking at September and October. I'll just highlight them here for pendings. October, so we dropped 31% in pendings. So we went from 49 last year to 34. So typically it slows down. October's 49, November's 43, December's 31. So we typically see a slowdown from like September on. But we saw a 6% drop in September, which is obviously less than half. So we averaged a 50% drop in the last 2 months. Another interesting number to see is that we're down 172 units year to date. So last year there was 722 throughout the whole year. This year so far we're at 55. If it keeps following trend and we have 21 next month and 15 the following month, we'll be at 580, which is a pretty significant drop. So what does that mean? Obviously, a lot of it's to do with interest rates. So as interest rates increase, it decreases the buying power, meaning that a lot of people that were looking aren't looking as aggressively. Honestly, it sounds like I've talked to a lot of lenders in the last couple of weeks. No one knows, but everybody's saying they're going to raise interest rates 2 or 3 more times, and they're probably going to stay there for a while. And so if you're in the buying market, probably the next couple months, if you want to buy a house in the next 2 years and have an interest rate below 8, would be the time to buy. If you're, and you could be totally wrong, and in which case there's always an opportunity to refi down the road. But that's kind of the sentiment I'm hearing from around the water cooler, if you will, is that interest rates are going to tend to go up. If you're looking to buy, think you want to buy in the next couple of years, or at least next 12 months, sooner is probably better because interest rates are going to keep going up. The flip side of that is on the selling side, obviously. And so if you need to sell in the next year and a half, the sooner the better. Last month, we saw a huge drop off, obviously. We're starting to see a lot more price reductions. So if you don't need to sell in the next 24 months, 12 to 24 months, totally ignore this. It doesn't affect you because by then, hopefully interest rates are back to normal, market's back to normal. But I think we're going to see a huge drop off over the next 6 months of the amount of properties that go pending, which means that there's less buyers in the market, which means that most likely, I don't know for sure if that's going to happen, our active inventory is going to climb back up. So I think this is like the world trying to rebalance everything. So if you look at our active inventory in Ames, 2018, we averaged, 240 was the highest, down to 140. 19 about the same. 22 or 2020 it was normal, started to drop. So the highest was 160, 180, lowest is 84. And then 2021, we saw just another huge drop in the amount of inventory. And so this might be like a 2-year rebuild of inventory to get us back by 2024 up to the 200 numbers. I don't know, but that would make sense. So anyway, that's the data. I'll let Sam jump in. He's got some stories of some recent transactions that might shed a little more light on these numbers. Close it out when you're done.
Hey guys, it's Sam. So what we've been seeing recently here in the market, I've been dealing with quite a bit of investors recently, just because interest rates here in the last months obviously have increased, but it's kind of kicked out those looky-loos, those investors that were kind of on the fringe of wanting to get in, yes or no. And when they're looking at the news, they're looking at the mass media, it kind of just makes everyone a little nervous. But at the end of the day, as an investor, you really probably shouldn't care what interest rates are. It's all based on what you're going to be cash flowing at the end of the month. Good little one-liner Colin always likes to use is date the mortgage and marry the property. So if the property cash flows right now and you love it, it's a good property. It's going to be something you're going to keep in your portfolio for a while. That's something to take in consideration because when interest rates do come down, say in 3 years, you can always refinance and you're going to be cash flowing quite well in that period. Something that I've recently seen was there's been a couple good investment properties still popping up in Ames. There's one that sold just down the road from me on Hilltop recently, and they had 6, 7 offers on it. Just because it's still competitive, those 4 bedrooms do well in Ames. So there's still good investment properties out there. You just got to be a little more due diligent, do your due diligence beforehand, and you'll still make a little bit of money out there. So let us know if you guys want to buy, sell, trade any real estate. The Fett guys are here for you. So have a great day.